Hi everyone, welcome back to e-commerce success by Ad360. Today, Shopify stock price is down 15%. What happened? They released their first quarter earnings. We're going to see what they said, what are the figures like, what this means for the future of Shopify, and how markets reacted. And we're going to see why some analysts said the results are worse than feared. Okay, I'm going to discuss this with the eyes of a e-commerce professional and someone producing apps for merchants, not as a financial analyst. So we're not going to go on details on the figures. I'm just going to try and give you a few cues, a few tips to analyze the reports of a company and how to read through the lines, understand what's going on very quickly, and what this means for us as business owners, as e-commerce professionals and marketing professionals. If you enjoy this content, please consider liking the video, commenting below, share your thoughts, your questions, what you think about the future of Shopify. And if you like this channel, please subscribe and activate the bell icon to receive a notification every day when I release a new video. This video is brought to you by Ad360. Ad360 is the easiest way to start selling online by running ads and creating ads in just one click. So in just one click, you can start promoting your products all over the web on independent websites and mobile apps, and it's never been easier to drive more visitors and buyers to your store. And so in particular, Ad360 works on Shopify, not only, but we're biased because we're Shopify partners, but it's also super important for us to understand what's going on in the market and with our partners and what's the future like for Shopify. So I'll give you my honest opinion about what's going on. Okay, let's go in the content. So this is the Shopify stock price. So you see today, so that's the close of yesterday, $485. And today at market open, they fell to $405. So that's a massive drop, more than 15%. Then it recovered a bit, but it's still down massively compared to yesterday. And so what happened? They released their earnings before market open today. And as some analysts say, the results are worse than feared. That's really crazy. So the revenue growth has decelerated for a fourth straight quarter. And we know after the exceptional 2 years we have known where you had to do a lot of purchases online and businesses had to sell online. So all e-commerce platforms grew fantastically fast, and now that things are getting back to normal, the growth rate is decelerating. But analysts were expecting that. Okay, so they were expecting like the e-commerce growth normalizing, and especially after some weakness from other e-commerce companies, investors were braced for a shortfall. This person says. But Shopify's Q1 earnings still fell short of the lowered bar. So they went even below what they expected. So that's why they said, worse than expected, worse than feared. And so what's going on? So a few things actually. Let's look at the report directly. And I'll put all the links, the article, the press release of Shopify, and on Twitter, the comments of the president of Shopify. So we see an angle from everyone. I'll put all these links in the description below. So let's look directly at the figures. Let's not look too much at the what people are saying, but let's look directly at the figures first. So the total revenue in the first quarter grew 22% to $1.2 billion. So the first thing to note is Shopify is still growing. So it's still getting a bigger company. They have more and more revenue. It's just that the rate of growth is slowing down. But they're still growing. They're not declining. Okay, they're just growing less quickly than before, and that was expected. What wasn't expected is the growth rate declined more than anticipated. But if we take a step back, as Shopify implies we should be doing here, they're looking at the 2-year compound annual growth rate, and they have 60%, meaning they grew 60% last year. And then another 60% of that amount this year, which is massive. It's really impressive. I think any company would love, especially a massive company, right? Not a small startup, but already quite a massive public company. They're still growing 60% year over year. That's massive. It's slowing down quite tremendously. There's a second red flag besides this. If we look past everything, the second red flag is this quarter they had an operating loss. So they lost money, almost $100 million, whereas last year they had almost 120 million profit. So last year was 120 million profit in the first quarter. This year was $100 million loss. So that's quite a big difference, right? So, and that's, I think, a big red flag. That's what markets weren't expecting. Now they have, a reason for that. So let's see how Shopify justifies this. They're saying, okay, yes, we do have a loss, but if you're looking at the adjusted operating income, we're actually having a $32 million profit, 3% of revenue, in the green. So how do they come from this loss to positive? This is not accounting magic, black magic with the figures. There are actually a lot of techniques to justify, in full transparency and honesty, adjusting, the revenues and the expenses, and you can go from loss this way to a profit. So how do they justify this? They say the difference primarily reflects the expansion of R&D, sales and marketing teams. So it's usual when you're investing money, you're making a long-term investment, especially in research and development. You might have a big expense now, but you're expecting that expense to have a result over time and to yield, benefits over time. And so in that case, it's okay to divide up that amount in smaller chunks, every month or quarter going forward for a few years, instead of taking the full expense at face value today, even if in reality, in actuality, there was maybe a massive, outgoing cash flow. And that's also what happened with the purchase of Deliver. So they're saying they acquired Deliver, a fulfillment technology provider. So they had to put a lot of cash out to buy the company, but this is a long-term investment for them. So if they discount that over a long time, it makes sense. It could go from a loss to a profit if you exclude this exceptional transaction. Okay, so we're not going to go through the entire figures and the entire justification. We'll leave that to professional financial analysts. But I wanted to give you a few cues of what to look at. Another thing that looks interesting to me is that the gross merchandise volume, GMV, so the total of everything that everybody sells on the Shopify platforms, this has increased quite a lot, 57%. And this has increased less than the overall revenue, which increased by 60% over the 2-year period. By year over the 2-year period. So this means that revenue is growing faster than just the overall volume of products and goods sold on the platform. So this means that they should be making more and more money on each product sold, and they're doing that thanks to the subscriptions and the merchant solutions, and all this stuff includes the Shopify Payment, Shopify Capital, Shopify Markets, and the different financial solutions that they also are selling. So I think this is still a positive for Shopify if you look at the long-term potential. And the fact that they just purchased this company, Deliver, is also, I think, a bullish signal, because they're trying to have a always even more integrated platform where you're going to be able to do more and more stuff in Shopify, more and more easily with a lot of integration, right? So you have the website, you have the point of sale, you have the Shop Pay, the payment services, you have Shop Capital if you need working capital, and you're going to have maybe an increased potential or an easier, more seamless integration of supply chain and fulfillment technologies, right? So it's going to be easier to manage shipping, returns, policies. And I went to the Deliver website. They have a 2-day guaranteed delivery policy. So that's really good. That's almost as good as Amazon. So I think that's, Shopify can make that a default available to everybody. I think that's going to be great. Okay. Finally, but we still know markets are a bit disappointed. So let's look at what Holly Finkelstein has to say. So they're the Shopify president. Okay, I like to see different viewpoints about who has to say what, and what they're saying is, so of course they're focusing on the 2-year period. What we saw in Shopify. So when you have 1 year, which is a bit disappointing, you can show like the 2-year period. And it's true, last year was really truly exceptional, amazing, and it's not going to be like that every year. And if you look at the 2-year period with a 57% increase, a compound annual growth rate, so year over year, that's amazing. Revenue increasing 60%, that's amazing. And what struck me is really this figure. They're saying Shopify accounts for 10% of all e-commerce in the US. That's fantastic. That's really massive. And 5 ways Shopify is leading from the front in e-commerce. So they're saying, they have the best payment solution, right? A point of sale solution, even in retail, even in offline, in real life, IRL. They're saying that the offline, so gross merchandise value grew 80%. So they're making more and more revenue, including for offline retail shops. So that's quite interesting. They said, the habits have changed, and now they've built more solutions to enable merchants to meet customers wherever they are. So orders completed on key partners like Facebook, Instagram, Google grew 4x year over year. So that's quite interesting. They're continuing to build solutions to remove barriers to entry and barriers to entrepreneurship, including access to capital. So Shopify Capital has funded a total of $3.3 billion. So if you have a growing shop, it's going well, and you can't really, you have too many orders, you don't really have enough working capital to pay for the product before you sell them, you can turn to Shopify Capital. It looks like they have a great solution, and more merchants are looking at that. And shipping and fulfillment, so we just discussed, that's why they acquired Deliver, but they're looking to build more stuff around shipping and fulfillment. There's one last thing which they haven't mentioned, but I think it's definitely the future for Shopify is also more integrated marketing and advertising. Once you have your shop and you have a great fulfillment, you have great supply chain solutions, you have access to capital, how do you get more visible? How do you drive more traffic to your store? How do you sell more? And I think today, so they have the partnerships with Google and Instagram and Facebook, but how do you manage to run ads anywhere on the web in just one click? And that's where Ad360 comes in, right? So Ad360 can start advertising in just one click. We generate automatically banners with your product image, title, price. We generate them in multiple format sizes, and we then start automatically campaigns and run these ads on hundreds of millions of independent websites, mobile apps, blogs, news sites, anywhere relevant where we're going to find qualified customers for your shop. So it's super interesting. As an example, we just showed before a financial services. So if you're selling products that have anything to do with financial services, you can find your ads being on this website instead of this Deloitte ad. You can have your business ad on the side. So all these, display images, placements are places we can run ads. We can run video ads before video players. So when there's a video player like this on an article in a website, we can run a pre-roll video featuring your products there. You have these bigger ads on the side, which we can do as well. Sponsored content at the bottom. And we can do ads for anything. So e-commerce products, online services, even crypto. You see some of these websites, contrary to Facebook and Google, financial related websites and market related news, they are crypto friendly. They accept ads for crypto, and so we can also run ads for crypto in case you're interested in that. So feel free to get in touch if you'd like to learn more about Ad360. There's a link in the description to book a call, to book a demo if you want to learn more, and you can also directly download the ad for Shopify. If you're on Shopify, there's a 14-day free trial. You can try for yourself and start advertising in just one click. I look forward to seeing you soon, and I wish you a ton of success.